Hey, it's Sean Price here with the Price and Price Group here at eXp Realty. I'm about to dive deep into the numbers of the market to give you a very objective look at not only what's currently happening, but also at the history of the market so that you can decide what is right for you. But I wanted to just shoot this quick intro just to give you my take on the pulse of the market. There is a lot of buyer activity out there. We have buyers calling. We're probably getting 5, 6, 7 calls a day from buyers. I did open houses over this weekend, and we had over 60 visitors come through in a 3-day period. Just a lot of activity. But at the same time, we have properties that I expected to move very, very quickly that are sitting a little bit longer. They're still selling, but they're sitting a little bit longer. So people are asking me, what's the market going to do? It's really, really hard to tell. I'm about to go into depth into the numbers. I'm about to go in depth into what the current status is of the market, supply versus demand, what the current pricing is, how that pricing is determined, what the market values are. I'm about to go into all of these details, but I wanted to let you know that the purpose of this video is to give you objective criteria, because the feeling that I have of the market is twofold. It's one, there's a lot of buyer activity, and two, it's harder to sell a house right now for a seller. But they're still getting good prices. So it's hard to judge a market by the feeling. And it's the same thing when you're reading the news or you're reading articles that tell you there's a huge crash coming, or articles telling you that it's going to appreciate for 10% this next year. Whatever you're reading, those are emotional responses, and just be sure that you don't flinch based on emotion. Be sure that you're very objective, you're very logical, you think very strongly about what your strategy is. My opinion, if you're speculating right now, if you intend to buy a house and then not do any kind of forced equity rehab to it and try to sell it in 6 months to a year just to kind of speculate and see if you can get that appreciation, it's probably not the best time for that, because we don't know what's going to happen with the market. But if you're going to flip a house and you're going to use good, solid mechanics, you're going to use good numbers, you're going to now analyze the property correctly, you're going to put good value into it, you could probably still do that and turn quite a bit of a profit. If you're going to buy a house and you're going to hold it for 3 to 5 years, still a great time to buy. If you're only buying a house for the next year and hoping to appreciate on that, maybe you don't buy at this point. You just have to look at what is your goal, what is your objective, and look at the numbers that I'm about to present to you and see what makes sense to you. Look at them objectively. Forget about all the hype. Forget about all the clickbait. Forget about all of the experts that tell you they know what the market's going to do, because the fact of the matter is, I have mentors galore. I'm an avid student of the market, and I've got half of the people that I study saying there's a huge market crash coming, and the other half are saying that the mechanics aren't there, that it's going to continue to appreciate. The simple fact is, nobody knows. So look at the numbers, stay objective, figure out what your goals and your strategy are, and apply those goals and strategy to the current market, and then just buy smart and make a logical decision. I love this part of real estate because it is very, very logical. It's very, very numerically driven. If you follow numbers tell factual stories versus what our emotions are telling us. So if you have any questions about the report that I'm about to give you, please feel free to reach out. I would love to dive into your situation with you to help you determine what the best strategy for you might be, given what your goals are and what you're looking to do. All right, so let's get straight to the report. So the big question out there right now, with interest rates rising, with the recession, with inflation, with the war in the Ukraine, what is happening in the real estate market? Is there going to be another crash? Is there going to be another 2008, real estate market crash? Today, we're going to dive into all the numbers, all the history. We're going to look in and we're going to let the numbers tell us what we think is going to happen. All right, my name is Sean Price. I am with the Price and Price Group here with eXp Realty. And as you all know, we do our weekly market report. And we're going to do that today, but then we're going to dive even deeper. We're going to look at year-over-year numbers. We're going to look at historical numbers. And we're going to provide all the data so that you can make a decision for yourself as to whether or not you think that there is a chance of the market crashing or not. Why am I focusing on this video? Because it's the number one question that I hear right now. What's the market doing? Are the prices starting to come down? What exactly is happening in the market? It's the number one concern that I hear from buyers and sellers. It's also, I see a lot of buyers sitting on the sidelines and waiting for this market crash to happen. I've had buyers that are sitting on the sidelines for over a year waiting on a crash to happen. I have a lot of buyers right now that are sitting on the sidelines waiting for the fall for the crash to happen. So is this a wise decision? Should you be waiting for the market to crash, or are you costing yourself more money by waiting because the market is continuing to move without you? So I'm going to dive into these numbers, but as I go through this, there's a couple things that we need to keep in mind. So when you're looking, I've got a couple notes here. When you're looking at what your decision is going to be with regards to should you buy now, should you buy later, a lot of that has to do with what your strategy is. So, for example, if you are a speculator, in other words, you're buying a property and expecting that property to just continue to appreciate, and then you're going to flip it in 6 months to a year for a profit, then you're going to approach the market differently, and the criteria of the market is going to be different than if you're a buy and hold investor who intends to hold a property for let's say 5 or 10 years. You have more flexibility with that. So as we're going through this process, really pay attention to what your goals are. If your intention is to buy a house today and plan on making money off of it in the next 6 months to a year without doing any work to it, without forced equity into it, it's probably not the best time to buy, and you'll see why as we go through this. But if your plan is to flip a home and you're an experienced investor and you intend to analyze a property appropriately, you intend to buy it at the right price, it might be a great time for you to buy. There could be a lot of opportunity out there. If you're a buy and hold investor, it could be a great time to buy it for you. If you're a seller, it's a fantastic time for you to sell and capture the equity that you've accumulated over the last several years of this massive appreciation. So it all depends on your independent situation as to what the best decision is for you. So after I go through all these numbers, if you have any questions or if you'd like for me to sit down with you and kind of run through your numbers with you personally, I'd be more than happy to. Okay, so let's start this off with what's being said in the media. So it depends on who you're talking to. If you're talking to, for example, Dave Ramsey just did a webinar about how he feels like the market is not going to crash, that it's going to continue to appreciate, that it's a safe time to buy. And then you have Patrick Bet-David, who just did a webinar on how the market is going to be the worst crash ever, and you need to hold back and pull back and save all your cash and wait for the crash to come. So everybody has an opinion. If you look in the media right now is talking about the next big crash. It's the economy is about to crash. Everything in the media is about fear. So you have to look at what is the source that you're getting your information from. You have to look at what is their objective. Why are they saying this to you? What do they want you to do? And you have to just kind of consider all of these factors. The goal of this video, we're going to go through the numbers. We're not going to give any opinion. This is not an attempt to get you to take a certain action. I just want to give you the numbers so you can decide for yourself. I will tell you, from a real estate perspective, because you're probably thinking, well, you're a realtor. Of course, you're going to tell me that the market's going to be just fine because you want me to keep buying houses. Yes, I want you to keep buying houses. But my opinion, no matter what the market's doing, is the best time to buy real estate was honestly 30 years ago. The second best time is today. And the reason for that is if you know what the market's doing and you buy intelligently, then you put yourself in a position for quote unquote timing the market, for being in the right place at the right time. If you're just sitting on the sideline waiting to time the market, you're going to miss every potential opportunity that comes through because you're not in the market. So my goal is not to get you to go out and haphazardly make crazy decisions. My goal is to get you to know exactly what the market's doing and buy appropriately. Okay, I hope that makes sense. Again, if you have any questions, please let me know. So the first thing I want to do is I want to go through what's been happening in the last 7 days in the market, actually the last 14 days in the market. And then we're going to dive into year over year, and then we're going to dive into historic data from history. Okay, so let's go to the charts. So here's what's been happening in the last 7 days. Buyer activity is down 11%. And inventory is up 14%. So you can see that in the last probably 5 or 6 weeks, inventory has been going up at the same time buyer activity has been going down, and then buyer activity go up, inventory. They've been going counterbalanced. So what's been happening is they've been going up and down like this week by week. So basically inventory is going up, and then buyer activity is chasing that inventory, and inventory comes down for a week. Well, there's nothing to buy, so the buyers come down, and so it's just kind of doing like this. So there's an up and down pattern with this. So if you look at what that means with regards to buyer's market versus seller's market, you'll see that it's just been going seller, buyer. But if you look at the overall trend, we have a neutral market. This orange line indicates a neutral market. So it's been a very fair market as far as in the last 6 weeks, 8 weeks, actually the last few months. It's kind of neutralized out. The market's softened. It's been a lot more resembling a normal market. Okay, but here's something that's really important that I want you to see. The last time this pattern happened was right here. And what may surprise you is this spike right here actually occurred on June 16th of 2021. And then we had a drop, and then we had a drop, and then we had up and down in the strength of the seller's market. So we had this same pattern right here, June 16th through this mark right here was September 13th, and then everything picked back up and we went right back into the chaos. So this was June to September. This peak here was May, so this did happen about 6 weeks sooner, but we are doing the exact same pattern right now, and we are in August. So if we're looking at this data versus this data last year, we may get another spike here come September. Now, is that going to happen? I don't know, but it's very interesting that we had the same kind of neutralization of the market in June of last year, and that was before interest rates changed. We may just be seeing a seasonal change here. Okay, so just keep that in mind as we go through this process. Okay, so that's what's been going on, excuse me, over the last 7 days. So now let's look at the history and see what we can determine may end up happening as we move forward in the market. So if you look at the total number of sales, new listings, we have 415 for the month of July, which is certainly down from 553 for the month of July in 2021. We can absolutely acknowledge that the market has softened, that there's not as much activity. There's not as much activity on the inventory side, and there's not as much activity on the buyer side as there was last year. So, but the question is that affecting supply versus demand, and does that affect pricing? Because most people that are sitting on the sideline right now are doing so because they're waiting for prices to come down. So that's what we're trying to determine. So if we have a decrease in the new number of listings, and therefore we have a decrease in the number of sales. July was 453, and July of 2022 was 312. So those are significant differences. So the market activity has certainly decreased. But here's what's interesting. This is what's telling us supply versus demand. So we look at days on market. If you look at July of 2021, the average days on market were 32. June of 2021, it was 38. So you can see July was actually the peak as far as the speed of the market. So if you look over at July of 2022, it's actually 25 days. June of 2022 was 21 days. So look at, since the interest rates went up, the days on market have gone down to the lowest that they've been. Look at how much lower that is. So this tells us that the demand is still there. In fact, it's even more there than it was in 2021 for the inventory that's there. Now let's go over to months of inventory, and this shows us the same thing. You can see that we had 3 months of inventory all through the summer of last year. Then it went up to 5, 4, 3. So it stayed between 3 and 5. On this number, 5 months is considered a neutral market. Anything above 5 months, like 6 months and above, is considered a buyer's market. Anything below 5 months is considered a seller's market. So it's been consistently in a seller's market. But look at June and July of 2022 after the interest rates had been increasing. And we were right in the middle of the recession activities. The inventory, or the months of inventory, or the absorption rate, is actually the lowest it has ever been. This whole time, it's the lowest it's ever been. Again, meaning this is a strong seller's market. There's less activity, but it is a strong seller's market. So what has that done to the median sales price? Median sales price, I'm going to go through some details on this, but this is what this is very interesting. So it looks like prices are coming down at this point. If you go back historically over the last, however long this is, 15 months, um, you'll see that there are peaks and valleys. So in June of 2022, we were at 658,000. In February, before the interest rates went up, we were at 565. In um, January, 539. In August of last year, 557. So my point in showing you this is yes, the variation in the median sales price is here. It does look like it's trending downward, but does that mean that values are coming down, or does that mean that the homes that have sold in that time frame were at that value that was lower than they were the previous year? And what I mean by that is there's a difference between sales price and market value, or asking, I should say, asking price and market value. The asking price or the sales price is what the market will pay for the property, whereas market value is the appraised value of the property. When sales price goes below market value, that's when prices start dropping. That's when values start dropping. But when sales price is at or above market value, that's where we have appreciation. So the median sales price doesn't tell us anything about what the market value is. It only tells us what the average home sold for, or what the price of the average home um, sold at. So what do I mean by that? Well, the median sales price is it's the middle number. So for example, I pulled this definition. If you have 15 homes that sell, then the median sales price would be the eighth home, whatever that price point was. So let's say the first 7 homes fell in the $100,000 range. Let's say the eighth home fell at 300,000, and then homes 9 through 15 were between 4 million and 20 million. The median sales price in that example would be $300,000. And the reason they use that number, it's a valid reason because it doesn't let the outliers, like if there's a majorly low property or a major, high priced property, skew what the middle is. So that's a good thing to do, especially when you have a large time span and you have a large pool of data. But if you're looking at just a monthly pool of data, that cannot give you completely accurate information as far as what's going on in the market. So you have to look at expanded periods of time. So what we do is we look at January to March of 2021 was 800,000. January to March of 2022 was 675. Okay. April to July of 2021 was 850,000. April to July of 2022 was 832,950. So if you look at this period after the interest rates went up versus the period before the interest rates went up and before inflation really kicked in, then you'll see that the price of the home or value of homes was actually $150,000 higher. Now, does that mean that the home's appreciated by that amount? No, it doesn't. It's just that's the sampling. So in order to know what the median sales price is and what's actually happening, we have to have, at least a year's worth of data to be able to look at that. So my point in bringing this in is the fact that these numbers are coming down may or may not indicate that prices are coming down. We don't know that for sure because we need a large period of time to have that. So I also pulled the average sales prices just to give us more information. The average sales prices for January to March of 2021 was 895,000. January to March of 2022 was 955,000. From April to July of 2021 was 884,000. April to July of 2022, 937,000. So the average sales price has gone up fairly significantly. So again, if we look at from January to July to give us the full year or the year to date, you'll see the median sales price is 835,000 from January to July of 2021. For 2022 is 792,000. So it looks like the homes that are on the market are selling at a lower price. Okay, so that does look like that is happening. Again, does that mean that market value is going down? So we have to dig in a little bit more. We look at average sales price, 888,000 versus 943. Um, so that means that's obviously going up in July of 2022. So does that mean prices are going up that significantly? Well, we have to look a little bit further. List price to sales price ratio, January to July of 2021 was at 100%. January to July of 2022 is at 100%. Now, this number is a little misleading because what happens here is when you run this report in the multiple listing service, it caps out at 100%. So this one could have been 105%, this one could have only been 102%, but it caps out at 100%. So the challenge with this is we don't know. What we do know is that the average home is selling at or above its asking price. There are some that are coming down. Those are the ones that are overpriced, but for the most part, homes are selling at or above their asking price. So this number tells me that values are not necessarily coming down yet. These numbers tell me, okay, the average of the homes sold, these just tell us the prices of what the property is sold at, but it doesn't tell us the values. This is the best indicator to what the values are doing, because a seller is not going to come on the market and typically put their property on the market for under the market value. If they do, then it's going to go for usually above ask because it's going to get a lot of attention. The point being that for the most part, the property values do not appear to be dropping at this time. Okay, so does that mean that they're not going to? Again, nobody knows the future. These are just data points for us to look at. So let's look at historically how recessions and how interest rates have affected the home values. So to do that, we're going to go to this chart here. So the blue line is your fixed mortgage rates average, and then the orangest line here is your median home prices. So first of all, I want to note this is where we are right now, and look how historically low that still is. I mean, that's still very, very good interest rates. It's just a little sticker shock because we got used to being down here, but these are still really good interest rates. So we'll start over here in the 1980s when interest rates were almost 20%. Okay, look at what home prices were doing. They were still appreciating. And then as the interest rates fluctuated over time, home prices still steadily went up. In other words, there's no direct correlation with the value. I keep saying home prices, I mean value. With the median home prices, there's no direct correlation to that number with the interest rates. So just because interest rates are going up, you can see what home values are doing. Interest rates alone do not mean that home values are going to come down. Okay, that's item number one. Item number two, let's look at recessions. So I'm not an economist, but I did go and I Googled the dates of the recession since the 1980s. And these are what I found. We had a recession in the early 80s. We had a recession in the early 90s. We had a recession in the early 2000s. We had one, obviously, in 2008 and 9. And then we had one in 2020, the COVID recession. First of all, look at the timing. Almost every 10 years on the dot. So what happened during the recession in the 80s? Median home prices still went up. What happened in the recession in the 90s? It looks like they kind of flattened a little bit, but they still continued to gently appreciate. What happened in the recession in 2000? Home prices continued to go up very slowly, but they continued to go up. What happened during the recession of 2008? Prices came down dramatically. This was the housing bubble that happened. And then 2020, they went up dramatically. That was during COVID. That's kind of the beginning of this crazy market that we've had. So the only recession that has caused significant home price or significant median home price drops was 2008, 2009. And that recession was caused by the housing market. That recession was because of subprime lending, all of the secondary market assets that were mismarketed, and that crash or that real estate activity is actually what caused the crash. Every other recession, the housing median home prices have continued to appreciate. So this happened, and Dodd-Frank was created. Dodd-Frank is actually the reason why all of the loans now, they're well-qualified loans. The buyers have equity. They have to prove their income. There are so many steps that you have to go through to purchase a home now, that all of the homes that have sold since this have been very, very well qualified. So what does this mean? Does this mean that market value is going to continue to appreciate? Does this mean that we're going to have another crash coming? That's a good question. I don't know the answer. I know what I'm leaning towards based on historical data, based on what I'm seeing in the market with demand right now. But I just wanted you to have all of this information so that um, you could determine for yourself what the right choice is for you. And again, you have to keep in mind, what is your goal? You just have to look at history. You have to look at the numbers. You have to look at the data. Keep an eye on the weekly market reports, and see what you feel is the right thing for your family. So if you want to talk about your situation personally, please feel free to reach out. I would love to run numbers with you. I would love to kind of sit down with you and determine your goals and see what the best choice for you personally may be. Okay, we'll see you on our next video.